Hey CGS members, it's Chris from Mullen. It is Tuesday, October 18th, and I want to thank everybody for filling out those questions, sharing your insight, thoughts, opinions, actions, feedback on everything. It's been really good help. Ashley and I spent a lot of time going through those, analyzing, organizing, and figuring out how these markets are working, how the best is to attack them, and how you guys are kind of also dealing with it. And of course, along with other things that we can do to improve our strategies and services, because we've had members help and share some trading tips with us over the last few years. That's helped us improve the CGS strategy, improve our band strategy, because everybody's got a few golden nuggets, something unique that somebody else hasn't picked up on or hasn't applied. And it's amazing how we can just keep refining these strategies over time, because the goal is we all trade the strategy. We're all trying to make money. That is our number one focus here. And to do that with the least amount of trading and the least amount of risk and drawdowns possible. So with that said, one of the things we heard back was that you guys wanted more content. You want me to provide some detailed analysis of the market. So what I'm planning on doing is a video like this tonight. I'll find a routine to go through these charts. Really, this is the first shot at it, but over time, I'll probably refine an order that I go through things and turn it into a quick routine to cover everything in an organized way. But I want to provide a video like this every Monday. So you'll have a Monday report and get a view of lay of the land for everything kind of key going down with this kind of more passive strategy and all the different markets, how they're moving. And then, of course, you'll get the Wednesday report and video that Brian provides every week. So let's jump into the markets. As you know, from a really high level, I'm just going to kind of fly through a lot of stuff here quickly, just as kind of an intro to get the first video up and out and see how it goes. But as you know, the SP 500 to me is the heartbeat of the stock market. Whatever the SP 500 is doing, if we know what it's doing, we can figure out what other things should be doing as well, and where we want to put our money or deal with different things. So more or less, the market has been in a very strong uptrend since 2020. Stock market's been up. Growth stocks topped out way earlier in terms of the overall indexes. But we have seen the stock market roll over here in 2022 and start to head lower. And the key is understanding the longer term trend at play. And the best way to do that is we look at our technical investor chart. So when we look at our technical investor chart, this is the COVID crash. This is a weekly chart of our strategy. We've got a sell signal on the market, then there's a buy signal, and you go into a bull phase. And then we had a sell signal back here in April. And then we're still on the sell signal. We continue to see this market be in a bearish phase. Doesn't matter if it's green or not. It doesn't mean we get long. We follow our trade triggers here, and the market has to show us strength. And when we compare both of these together, these are the same time frames. You'll notice the cursor lines match and move together. So you will notice that when the market is in a strong bull trend, an uptrend, we get nice long CGS trades. Be the odd little trade that flips and flops, but overall we're getting nice long trades. As the market starts to weaken and roll over, you'll notice the market can start to chop up a little bit, becomes tougher. Trades don't have the follow through, and then eventually the trend kind of starts to go down. And then instead of the majority of the time being these beautiful uptrends, the majority of the time turns into mostly downtrends. And the best way to see this is to go look at the SP 500. And this is the last several months, most of this year. And you'll notice we get these very strong rallies, 7, 3, 6, 6, 9, 8, 5, 6, 7. And people get really caught up in these very strong rebounds. The market has a way of getting people to get sucked in and to think there's a market bottom. And if the market rallies generally 4 or more % in a couple days, everyone seems to think it's a market bottom. Everybody piles in, and then the market sells off and rolls over and takes all their money once that wave of emotional investors and traders pile in, and then it goes down to make lower lows. And that's kind of where we're at right now. The market's trying to figure out if it's going to get a little bit more traction. Now, believe it or not, if I was to just clear this chart up, we do have a bit of a unique scenario unfolding right now. First off, we have a very similar technical setup unfolding right now. Both of these peaks are starting to show, we're starting to get some pretty good strength in the market. Nowhere near a buy signal yet. We could actually have a buy signal technically if we had a huge rally in one day. We might be able to stretch out a signal, but we are getting close to a buy signal. It's actually very similar signal that we had back over here. And the market ended up still pulling back again, and then it ran up, and then we caught this nice trade to the upside. So we're very close to this market's trying to push up and start to get above these previous highs and potentially give us another trade to the upside. Now, I talked about this earlier this year that ideally we see the market sell off into October. We go for a holiday Santa Claus rally, and then eventually what I think would happen is we go way back here. Eventually we could see the Santa Claus rally come out. January, February comes around, the market comes down, and all hell breaks loose, and it could be one crazy year next year. Again, just saying what could happen and what, so far everything that I've been talking about this year has been unfolding, and that is the next major chapter in the book. But we could very easily have a buy signal here that lasts a few weeks. It could be a decent play. And then eventually when it rolls over, we could be getting into an inverse trade to play the downside move. So that's something to take note of. And of course, it's October. October is typically a low in the market. We usually see the market put in a bottom. Sentiment is very bearish still. Other than this strong rally actually really changed the sentiment quite a bit. If we actually look at this, I'm going to look at the sentiment chart right here. I can separate these charts. Now, the market has a tendency to suck traders in to the market, get them feeling really good about one direction and then changing direction. Now, again, remember the overall bias here in this market is down. Our longer term investing strategy, the TTI, is telling us that, hey, don't be holding stocks because the tide is going down. It's going out. And so this here is our sentiment chart. This is something I've created, and more or less when there's deep red in the chart, that means it's like blood in the streets. People are panicking. They are liquidating everything. And usually those will put in very strong rebounds after that. And then what happens is the market will have one of these knee-jerk reaction rebounds and give us green bars. And when you get these green bars after a very strong bounce, that's everybody saying, buying into the market, becoming very bullish. Everybody piles in. Our panic, FOMO, greed buying indicator spikes because everybody's just buying on the ask. They don't care what price they get. They're just buying every growth stock they can. And then, of course, the market dies and rolls over. We had a tradable bounce here that we actually played. It was a very strong push. But then we got back over here. It's hard to see, but there's a dark green bar in here. Dark green means people are very, very bullish. We had another green bar over here. We had about a week and a half of green. Another green, another green. And after each one of these, the market put in a very strong sell-off and flushed down. And that usually happens when we're, more times than not. Of course, more recently, we had one over here and then the market crashed. We got orange, which is people getting a little bullish. But now we've got, green bars here again, and everybody just got super bullish. It's really hard to see this dark green bar. But people are very bullish again right now, and typically the masses are wrong at a critical turning point. But we'll have to see because we could get right into one of these. This is what I talked about before. We're in a similar setup here where we could get a nice run. Maybe we'll pull back a bit and then run, who knows. But we are very close to a potential bounce in this market that is tradable going forward. So hopefully that gives you kind of a bit of a view there. Now, let's go take a look over at our hierarchy, which is TLT, UUP, UDN, and BIL, which BIL is the same as a cash position, more or less. BIL pays some dividends. It looks really noisy on this chart because it's got expiring notes and it's paying dividends. So it goes up in value, then it pays a dividend. So it loses the value of the dividend. So it looks pretty gnarly. But I mean, if you've got a brokerage account like Interactive Brokers, they pay like 2.5%, something like that. So you're almost better to just accumulate interest in a brokerage account. Sometimes it depends on the market conditions. But the key play here is still UUP. Although we are sitting in cash right now, UUP continues to be the dominant trend. and our strategy knocked us out of that. We did make a little bit on that trade, and we're letting this market continue to mature. And we're waiting for a new stock market buy signal to take place, which will reset everything and get us back into the markets. So if we go and take a look over at, let's take a look over at the 10-year Treasury note. And if we take a look at this, and especially if we go back to a long-term chart, let's go to a monthly. I mean, obviously we've seen a huge run up, and we go way back in time here. We can see the last time it put in a major top way back here. This was a major top in the market. And right now, I think we are putting in what I think is a major low or a bottom we've put in, and now we've busted up through that and we're taking off. And of course, rising rates is going to kill the stock market eventually. It's going to kill a whole bunch of different things, I think. Anything's interest rate sensitive, which is real estate. Real estate has turned a corner, and I think it's going to get pretty gnarly. In the States, you guys can lock things up a rate for like 30 years. But in the rest of the world, like Canada, UK, most mortgages are 3 to 5 years. So these rising rates, all these mortgages that people have been getting in 3 or 5 years is when people are going to get, they're probably going to struggle to get a mortgage because the rates will be so high. They won't get the credit for it. The prices of homes are going to drop, and it's just going to create this massive feeding frenzy. And we've seen it before, but it does carry over to the States. It's a little differently, but it's still when the housing market goes down, pretty much they all go down together. Other things right now is we're seeing, especially if we go to the daily chart and take a look at real estate here. Rates have rocketed higher, and real estate has gone, the real estate ETF has gone the opposite direction. Obviously, 34% to the downside. As rates go up, it's going to kill the potential for real estate. And the other thing is utilities they always are borrowing money. They carry a lot of debt, and it has, we've seen a pretty big drop in utilities. What people think is a very defensive, boring, safe play getting into utilities, they don't realize, you almost lost 25% of your wealth in utilities, all because the rates and not following the trends and things like that. So there's a big breakdown potentially happening here in the utility market. It might bounce up for a bit if the stock market bounces, but I think it's going to continue to suffer with the rates in the direction that they're going. The other thing would be, if we take a look at the US dollar index here itself, let's go to the monthly chart. If we take a look at the monthly chart, you can see we're getting up to some nosebleed sections here. This is going to be another level somewhere right in this range here. We got some more highs over here. And the dollar is still primed and ready to continue to muscle its way higher. A lot of people are saying the dollar is topped. Usually people hear a lot of noise just before the end, but keep in mind some of the biggest moves, the biggest bars happen just before a trend changes direction. So there could still be a great big squeeze and big green bar up here. And the daily chart shows how that's very easily possible. If we just look at these levels that I've drawn and we look at the price action, it's nothing but a series of rallies and pauses, bull flags. And of course, here we've got a rally. Whoops, sorry. Here we've got a rally, and it's just consolidating through here. And it's just a bull flag that could end up, continuing to rally very easy, just like it did every other time over here. Remember, trends are more likely to continue than they are to reverse direction. So the odds are in your favor if you just stick with the trend, especially if you've got both trends in your favor, the long term and the shorter term that you're trading. That way you've got some room for error. If one timing is off, the other one might still support price, so it doesn't just potentially collapse around you. Other than that, I think that kind of covers it for the video. Gives you kind of a view of where we're at and these markets and how bonds have been underperforming, and how these emotional bounces in the market. If I could get this to draw back here, these emotional bounces in the stock market suck people in and then chew them up and spit them out, and we see lower prices, and why picking bottoms are deadly. And we're finally getting to the point here where we could end up getting a nice short inverse trade in the next, who knows, few weeks, few months, whenever it unfolds, we'll be playing it. But we might have a long trade here coming up in the next week or so, and then we'll take it from there. But anyways, hopefully that gives you kind of an overview sight of some of the stuff I'm showing. As I go through these videos every Monday, I'll refine a better format. I feel like I'm all over the place here, and you'll start to get comfortable with the charts that I'm using and the color coding and all of these things. And I can show you, eventually I can show you some more stuff into, like this morning, we've got our panic, our gap kind of panic move, this big fade here. These are great short-term trading opportunities. Not that I focus on day trading by any means, but understanding the panic buying, the panic selling, how all these flip-flop in the markets from highs to lows. I'll show you all these different things as we kind of go through the markets. But other than that, that is about it for this week. And tomorrow, Brian will get you the Wednesday report and update covering all the other markets and commodities and asset classes. Talk to you soon. Bye-bye.